Hey everyone, and welcome back to Safe, Simple Sound. Today we're diving into the critical topic of financial security, especially for young professionals in our increasingly digital world. Today's episode is inspired by a thought provoking article titled Securing Your Financial Foundation: How Young Professionals Can Lead the Way. It really resonated with our core belief here at Safe Simple Sound of seizing financial control and understanding our financial choices. This article highlights the fascinating paradox of digital natives, highly comfortable with technology, yet sometimes surprisingly vulnerable when it comes to financial security. It emphasizes the importance of recognizing psychological biases like optimism bias and social proof that can lead to risky behaviors. And most importantly, it challenges us to not just accept outdated security practices, but to actively innovate and lead the charge towards a more secure financial future. This aligns perfectly with our mission of empowering you to develop wealth and a lasting legacy by making choices that are safe, simple, and sound. So, how are we going to unpack all of this? We'll follow the article's lead and explore three crucial topics. First, we'll delve into the digital native security paradox, examining scenarios like the oversharer and the password repeater, situations many of us can probably relate to. Then we'll move on to upgrading financial communications, where we'll discuss scenarios like the realtor request and explore how to advocate for safer practices with service providers. Finally, we'll wrap up with AI and personal data, making smart choices, addressing critical questions around data privacy in the age of AI assistance, and exploring scenarios like the potential impact of a data breach. Get ready to challenge your assumptions, learn practical tips, and become a true financial security innovator. Let's dive in. Let's start with our first scenario, the oversharer. Imagine this. You're super excited about your new car. You post a picture on social media, maybe even mention the dealership and some details about your financing plan. Seems harmless, right? But this seemingly innocent act can open you up to potential scams and identity theft. So, Taylor, what are your thoughts? How much information is too much when sharing financial milestones online? And what are the potential risks of oversharing these details on social media?
Hmm, that's a good question. I guess I've never really thought about it as a security risk. I see people posting about big purchases all the time. It feels normal. This reminds me of social proof in the article. When everyone's doing it, it feels safer. But now that you mention it, sharing financing details, that does seem a bit much. Someone could potentially use that information to impersonate you, maybe even contact the dealership pretending to be you.
Exactly, Taylor. The reference article mentions optimism bias, where we think we're immune to these threats. And like you said, social proof makes us lower our guard. Even seemingly insignificant details like the dealership's name can be pieced together with other publicly available information to build a surprisingly complete profile of you. That makes you a more appealing target for phishing scams or even identity theft.
So if I understand correctly, even if I don't share my bank account details directly, publicly available bits of information about my finances can be used against me.
Precisely. Think of it like a puzzle. Each piece of information you share, even something seemingly innocuous like the make and model of your new car, is a piece of that puzzle. A scammer might already have other pieces, perhaps your name and city from your social media profile. Adding that new piece makes it easier for them to complete the picture and potentially exploit you.
Great point, Sam. Remember the article talked about the 24-hour rule? It suggests waiting 24 hours before sharing financial details online. It's like a cooling off period borrowed from emotional investing to prevent impulsive decisions. This can be applied to social media sharing as well.
That's a really helpful tip. I'm definitely guilty of posting in the heat of the moment. I also like the reverse check idea from the article, asking myself, how could someone misuse this information? That's a powerful way to shift my perspective.
Absolutely, and as you build wealth, these precautions become even more critical.
So to recap, oversharing seemingly harmless financial details on social media can expose you to various risks, from phishing scams to identity theft. Remember the 24-hour rule and the reverse check before posting anything finance related.
This has been really eye-opening. I'm definitely going to rethink my social media habits.
Great. As a call to action for our listeners, take a moment to review your social media privacy settings and consider the potential risks before sharing financial information. Now let's shift gears to another common security pitfall, one that many of us might be guilty of: password reuse. Our next scenario is called the password repeater. Imagine a young professional, let's call him Taylor, who uses the same password for everything: their bank account, social media profiles, and online shopping accounts. Then disaster strikes. One of those platforms gets hacked, and suddenly all of Taylor's accounts are vulnerable. Sam, I want to start with you. Why is password management so crucial for financial security?
Alex, it's crucial because our digital lives are interconnected. Think of your password as the key to your digital house. If you use the same key for your front door, back door, garage, and safe, what happens if someone gets hold of that one key? They have access to everything. In the digital world, that key, your password, unlocks access to your financial data, personal information, and even your online identity. If one platform with weak security is compromised, the attacker can use that same password to try accessing your other accounts, especially your financial ones. It's like dominoes. One falls, and the rest follow.
So, if I understand correctly, using the same password everywhere creates a single point of failure. This reminds me of what we discussed earlier about diversification in investments, not putting all your eggs in one basket. Here, we're talking about not putting all our security reliance on a single password, right?
Exactly, Taylor. It's a great analogy. Diversification is key in both investing and security. Sam, now that we understand the why, let's talk about the how. What tools and techniques can be used for effective password management?
The simplest, yet often overlooked solution is a password manager. These tools generate and store strong, unique passwords for each of your accounts. You only need to remember one master password to access the vault. Think of it like a high-security safe for all your keys.
I've heard of password managers, but always thought they were too complicated. Is it really that simple?
Absolutely. Most modern password managers are user-friendly, integrating seamlessly with your browser and mobile devices. They can even autofill login forms for you. Beyond that, enabling two-factor authentication 2FA wherever possible adds another layer of security. It's like adding a deadbolt to your door. Even if someone has the key, they still need another code to get in.
That's a great point, Sam. Two-factor authentication is like having a backup key, often tied to your phone, that you need in addition to your password. So even if someone cracks your password, they still can't access your account without that second code.
So, if I were in that scenario we described earlier, where I use the same password for everything, a password manager in 2FA would have significantly reduced my risk.
Precisely. With a password manager, each account would have had a unique, strong password, preventing the domino effect of one breach compromising everything. And with 2FA, even if the compromised password was used, accessing your other accounts would have been much harder for the attacker.
Let's recap. We've learned that password reuse creates a single point of failure for your online security. The solution? Use a strong password manager to generate and store unique passwords for each account. And double down on security by enabling two-factor authentication whenever possible. These are simple, yet incredibly powerful steps to take. Take action. Implement a strong password manager and enable two-factor authentication wherever possible. Your digital security depends on it. Now, let's shift gears to another common security slip-up, especially when dealing with important financial documents: email. We are calling this scenario the emailer. Imagine this. You're a young professional, excited about buying your first home. You're emailing back and forth with your mortgage broker, sending sensitive documents like pay stubs, bank statements, even your social security number. Seems normal, right? But what if that email gets intercepted? This is the story of someone who learned the hard way about the risks of emailing sensitive financial information. So Taylor, first question, what are the risks of sending financial information via email?
Well, it seems pretty obvious now that you put it that way, Alex. Email isn't really private, is it? I mean, I guess I always knew that on some level, but I never really thought about it with financial stuff. Someone could hack into your account or even intercept the email in transit, right? This reminds me of what we discussed about passwords If someone gets access to your email, they could potentially unlock other accounts too.
Exactly, Taylor. Email is like sending a postcard. Anyone along the way could potentially read it. There's a lack of end-to-end encryption in standard email, meaning the message isn't scrambled in a way that only the sender and recipient can decode. While some providers offer enhanced security features, it's not always guaranteed, and it depends on both the sender and recipient having those features enabled.
So, Sam, building on that, what would you say are some safer alternatives for sending these kinds of documents? What should our listeners be using instead of email?
There are much more secure options. Think of secure document sharing platforms like a locked box being delivered directly to the recipient. Services like encrypted cloud storage, password-protected file transfers, and dedicated document portals offer much stronger protection. Some even allow for added security measures like two-factor authentication and expiration dates for shared files.
So, if I understand correctly, instead of emailing my bank statements directly to my loan officer, I should upload them to a secure platform and then share a link with them. That way, the document itself isn't traveling through the open internet.
Precisely. That greatly reduces the risk of interception. Think of it like this. You wouldn't hand your financial records to a stranger on the street and ask them to deliver it for you. You'd use a secure courier. These platforms act as that secure courier in the digital world.
That's a great analogy, Sam. And it brings up another practical point. What happens if you're dealing with someone, like a realtor or a vendor, who still insists on email? How do you navigate that, Taylor?
That's a good question. I think I'd try to explain the security risks, maybe even share a link to an article or resource like the one you mentioned in the show notes. I could also offer to walk them through using a secure platform. It might take a little extra effort, but it's worth it for the peace of mind.
Absolutely. You're not being difficult. You're setting a new standard. Leading by example is a powerful way to encourage better security practices, just as we discussed in the reference article.
So, let's recap. Emailing sensitive financial information is risky due to potential interception and lack of robust encryption. Secure document sharing platforms offer a much safer alternative, acting like a digital courier service for your important documents. Don't be afraid to advocate for better security practices, even if it means educating others along the way. Listeners, explore and adopt secure document sharing platforms. Make this your new standard for transmitting sensitive financial information. This small change can make a big difference in protecting your financial future. And speaking of leading by example, our next scenario explores just that. We'll look at how a young professional navigates a situation where their realtor requests financial documents via email. This scenario, titled The Realtor Request, is a perfect example of how you can be a security innovator. This time, we're flipping the script. Instead of being the one making the security mistake, we're the ones educating others. Imagine this. You're buying your first home, an exciting milestone. Your realtor asks you to email over some financial documents. Now, knowing what we've just discussed, you're aware of the security risks. This is our scenario. Taylor, let's say you're in this situation. How can young professionals like yourself advocate for better security practices with service providers like realtors?
That's a great question, Alex. It can feel awkward pushing back on someone who's supposed to be helping you, especially in a big, complex process like buying a house. I think the key is to be proactive and informative, not accusatory. Instead of saying emailing these documents is unsafe, which might put the realtor on the defensive, you could say something like, "I'd prefer to use a secure document sharing platform. Would that work for you?"
Exactly, Taylor. Framing it as a preference rather than a criticism is crucial, and having a specific alternative ready, as you mentioned, makes it much easier for the service provider to adapt. There are numerous secure platforms available, some even offering audit trails and encryption, which add extra layers of protection.
This reminds me of the familiarity bias from the article. The realtor might be used to email and think it's perfectly fine, simply because it's familiar. We, as the more tech-savvy generation, can help break that bias by introducing them to safer, albeit less familiar, options.
Absolutely. Sam, what are some effective ways to introduce these secure alternatives without sounding condescending or overly technical?
Keep it simple and focus on the benefits. You could say, using a secure platform ensures our documents stay confidential and protected. It's also easier to track and manage everything in one place. Leading with the advantages for both parties helps create a collaborative rather than confrontational dynamic. You can even offer to help them set up an account on the platform if they're unfamiliar with it.
So, if I understand correctly, the key is to be prepared. Before even starting the house buying process, I should research secure document sharing platforms, choose one, and have a quick explanation ready to share with my realtor.
Precisely, Taylor. That proactive approach can make a huge difference. You're not just protecting your own information, you're potentially influencing the realtor to adopt better security practices for all their clients. Think of the ripple effect. You're the Alex from the article, leading by example and creating lasting change. So, to wrap up this scenario, remember, be proactive, offer solutions, focus on the benefits, and be patient. You are leading the way in upgrading financial communication. Our call to action for this segment: prepare a brief explanation of secure document sharing and be ready to share it with service providers. Now let's move to another common situation where secure communication is crucial: paying vendors, especially for significant events like weddings. This brings us to our next scenario, the vendor payment. Imagine this: you're planning your wedding, everything's coming together beautifully, and then you receive a payment request from a vendor via Venmo, or maybe even a request for a check in the mail. This is our scenario. How do you navigate this situation to ensure everyone's finances are protected? Taylor, what comes to mind when you think about secure payment options in this context? What are the different secure payment options available? And how can you confidently navigate and recommend secure payment methods?
Well, the first thing I think of is credit cards. They offer some level of fraud protection, and you can dispute charges if something goes wrong. But I also remember from our password repeater discussion how important it is to be cautious about where you enter your card details. So just using any online form a vendor sends might not be the safest option.
Exactly, Taylor. That's a crucial point. While credit cards offer buyer protection, sharing details over email or unencrypted forms isn't ideal. Think about platforms specifically designed for business transactions. These often have added layers of security and buyer and seller protections.
Like what? What are some examples?
Sure, think of platforms like PayPal, Stripe, or even Square. These platforms act as intermediaries, so you're not directly sharing your financial information with the vendor. They also offer dispute resolution mechanisms if any issues arise.
That's a great point, Sam. It's like using a trusted messenger service instead of shouting your financial details across a crowded room. These platforms provide a secure channel for the transaction.
So if I understand correctly, using a platform like PayPal adds a layer of security because I'm not giving my card information directly to the vendor. This reminds me of how we talked about using secure document sharing instead of emailing sensitive documents directly.
Precisely. It's the same principle of adding a secure middle layer. For larger transactions, especially with vendors you might not know well, consider using escrow services. These hold the funds securely until both parties fulfill their obligations. This is common in real estate, but can also be useful for other significant purchases.
So we've got credit cards, payment platforms like PayPal and Stripe, and escrow services for larger transactions. These are excellent examples of secure options. Now, Taylor, let's say the vendor insists on a check or cash. How would you confidently guide them towards a safer method?
I think I'd start by explaining the benefits of using a secure platform, emphasizing the protection it offers both of us. I could even offer to help them set up an account if they're not familiar with the technology.
Excellent strategy. Emphasize that it's not about distrust, but about best practices in today's digital landscape. Many vendors may simply be unaware of the risks. Offering assistance can be a powerful way to encourage adoption. You're leading by example, just like Alex in our real-world example from the article. Remember how Alex helped the real estate agency upgrade their security? You can do the same.
So, in this scenario, we've explored secure payment methods, ranging from credit cards and dedicated platforms like PayPal to escrow services. We've also discussed how to gently guide vendors towards these safer practices. The key takeaway here is to be proactive. Don't just accept potentially risky payment requests.
Right? It's about advocating for secure practices, not just for ourselves, but for everyone involved.
Exactly. Your call to action, listeners: research secure payment systems and be prepared to suggest them to vendors and service providers. You can even prepare a short explanation of the benefits beforehand, just like Taylor suggested. Now, as our financial lives become increasingly digital, we're interacting more and more with automated systems and AI. This brings a whole new set of security considerations to the table. Next, we'll explore the world of AI and personal data, specifically looking at the scenario of using an AI chatbot for financial advice. It's time for our next scenario: the AI assistant. Imagine a young professional, let's call her Maria, who's trying to get a better handle on her finances. She starts using an AI chatbot that promises personalized financial advice. It seems convenient, even cutting edge. Maria happily answers the chatbot's questions about her income, spending habits, and even her financial goals. She feels like she's getting great advice, but she doesn't realize she's sharing more personal data than necessary. This data could then be used for targeted advertising, sold to third parties, or even worse, become vulnerable in a data breach. Sam, as our AI expert, what are the data privacy implications of using these seemingly helpful AI-powered financial tools?
The main issue is the sheer volume of data these tools often collect. Think of it like this: a traditional financial advisor might ask about your income and expenses. An AI assistant might track every transaction, every online search related to finance, even your location data to infer your spending habits. This creates a rich data profile that's incredibly valuable to companies.
Wow, I hadn't thought about it tracking that much. So it's not just about what I'm telling it directly, but also what it's inferring about me based on my other online activity.
Exactly, and that's where the privacy concerns arise. Even if the data is anonymized, combining it with other data points can often re-identify individuals.
That's a great point, Sam. It's like pieces of a puzzle. Individually, they may seem meaningless, but together they can paint a very clear picture. So, how can we as users evaluate the data protection policies of these tools? What should we be looking for?
First, look for a clear and accessible privacy policy. Avoid tools with vague language or policies that are difficult to find. Look for specifics about what data is collected, how it's used, and if it's shared with third parties. A good policy will also explain your rights regarding your data, like the right to access, correct, or delete your information.
This reminds me of the security fatigue mentioned in the article. Reading through those long, complex privacy policies can be overwhelming, and it's tempting to just click agree without really understanding what we're agreeing to.
Absolutely, Taylor. And companies often rely on that fatigue. But it's crucial to take the time to understand how your data is being handled, especially when it comes to your finances. A good starting point is to look for certifications or seals from reputable privacy organizations.
Another red flag is if a tool requests significantly more data than seems necessary for its function. If a budgeting app wants access to your social media contacts, that's a warning sign. Ask yourself, does this tool really need this information to do what it claims to do?
So, to recap, when using AI-powered financial tools, remember these key points. First, be mindful of the vast amount of data these tools can collect, both directly and indirectly. Second, carefully review their privacy policies, looking for clear explanations of data collection, usage, and your rights. Finally, be wary of tools that request excessive data.
So if I understand correctly, it's all about being proactive and informed. We can't just assume these tools have our best interests at heart when it comes to data privacy.
Precisely. Before entrusting your financial data to any AI tool, do your research. Your privacy is worth the effort. And that leads us perfectly to our next scenario, the data breach, where we'll explore what happens when these AI tools, despite our best efforts, become compromised. Imagine this: you're using a popular AI budgeting app. It helps you track spending, suggests saving strategies, and even automates some bill payments. It's convenient and seems secure. But then the unthinkable happens: a data breach. Suddenly, your financial information, spending habits, and even linked bank accounts are exposed. This, Taylor, is the scenario we're exploring now. This situation really underscores the importance of data minimization and compartmentalization. Taylor, what are your initial thoughts on how someone could minimize their digital footprint in the first place when using these kinds of tools?
Well, thinking about that AI assistant we discussed earlier, I'd be wary of linking all my accounts to one service. It's convenient, sure, but if something goes wrong, everything's exposed. It reminds me of that time my email got hacked and suddenly everything connected to that account was vulnerable. It's like putting all your eggs in one basket, which we learned is risky in our investment discussions.
Exactly, Taylor. That's a great analogy. Data minimization is about limiting the information you share. Think of it like this. If the AI tool only needs your monthly income and expenses to provide budgeting advice, don't give it access to your investment portfolio or social security number.
So, be selective about what you share. Sam, can you give us some concrete examples of minimizing our digital footprint with these tools?
Absolutely. Start by carefully reviewing the permissions requested by any app. Does a budgeting app really need access to your location? Probably not. Disable unnecessary permissions and only provide the minimum information required. Also, avoid linking directly to your primary bank accounts if possible. Instead, consider using intermediary services or manually inputting data.
So, if I understand correctly, it's like creating a firewall between different parts of my digital life. This brings us to compartmentalization, right? How do I actually do that?
Precisely. Compartmentalization involves separating different online activities. Sam, how would you explain this to our listeners?
Think of it as having separate email addresses, one for personal communication, one for financial matters, and maybe a dedicated one for interacting with AI tools or signing up for online services. This way, if one account is compromised, the damage is contained. It also limits the data any one entity can collect about you.
This reminds me of what we discussed about social sharing. Just like we create separate profiles for professional and personal use, we should have distinct digital identities for different financial activities.
Excellent connection, Taylor. The reference article we linked talks about platform split, creating separate identities for financial and social activities. And it applies here as well. So, to recap, when dealing with AI powered financial tools, remember two key principles: data minimization, only share what's absolutely necessary, and compartmentalization, separate your online activities to limit the damage of potential breaches.
It's like building a secure digital fortress with separate compartments and limited access points.
Exactly. Now, for our listeners, take some time this week to review the AI tools you're using. Implement data minimization strategies and create separate email accounts and online profiles for different purposes. Your future self will thank you. And that wraps up our deep dive into financial security in the digital age here on Safe Simple Sound. We explored the digital native security paradox, how our comfort with technology can sometimes make us surprisingly vulnerable, and challenged ourselves to become security innovators, just like the article Securing Your Financial Foundation encouraged. We tackled real-world scenarios, from oversharing on social media to navigating secure document sharing with realtors and vendors, and even discussed the critical importance of data privacy in the age of AI. I think the discussions about upgrading our financial communications, particularly the realtor scenario, really highlighted how we can all be proactive in shaping a more secure future. Remember, being security conscious isn't about being difficult, it's about being smart and proactive. Thank you all for tuning in and being part of the Safe Simple Sound community. Your engagement makes these conversations even more valuable. Don't forget to check out the show notes for all the resources we mentioned today, and be sure to subscribe so you don't miss next week's episode, where we'll be exploring even more advanced security strategies for your growing wealth. Keep those security innovation stories coming in the comments. We love hearing how you're making a difference. This is Alex, reminding you to make your financial choices safe, simple, and sound. Until next time.